Good afternoon, everyone. It's Adrian Hill again. You've heard a lot of me recently, and I'm sorry about that, but there's ever-changing times, so I can't apologise for that. We've just got to do what we've got to do to keep moving forward for everyone's sake. What I wanted to do was a quick Jobkeeper payment update webinar, but rather than have everyone come on, we're just going to email it out to you guys with a recording. So I want to give credit to my accounting body, which is the National Tax and Accountants Association. They've given us this update that I'm using as the foundation for my webinar update. Now, some of the stuff is going to be going over a little bit of old ground, but there's also a lot of things that have been clarified and some things are actually new. So the older stuff I'll go through as quick as I can. But start with here, the Jobkeeper payment. I won't need to go through any of that. I'll just let you guys leave it there now. The main thing is that it's only for 6 months. The first pay period that the ATO are going to use for Jobkeeper payment repayment subsidy, so you know how it's a monthly in arrears, is the 30th of March, and the last pay period per fortnight they're going to use is the 27th of September. And it's paid, as I said, monthly in arrears, and the first payments won't be made till around May 20, first week of May. When is an employer eligible? We've already covered that. It's the GST turnover, which is what I want to say. Their actual or estimated GST turnover has fallen or is likely to fall by 30% or more. Now, gathering information on the decline. One of the primary tests is the decline in decline in turnover test is mentioned above, and it's done on a self-assessment basis. So what's required is you got to make a reasonable estimate of the turnover for a month or a quarter. Now, you're able to use three, at the moment, you're able to use 3 options when you're looking at whether your business has dropped 30% or more. The first option is March 2020 actual GST turnover compared to March 19 actual turnover. The next option is estimated or projected GST turnover for April 20 against actual turnover for April 19. And the last option is estimated or projected GST turnover for the April to June 20 quarter, estimated versus the actual April to June 19. Now, if you've got lumpy business or you're new, they're meant to be bringing alternate tests, which at this point they have not done. The important thing is that eligible employers must elect to participate in the Jobkeeper scheme via the ATO. What you've done so far is just register your interest, which is not the same as electing or enrolling, okay? And you've got to provide information to the ATO on all eligible employees, as well as on a monthly basis, how many you're continuing to pay. And as I just said, there's a formal enrolment process, which we will do on your behalf. But that's not available until the 20th of April. Now, this employers must register, which is enrolment. You're only entitled to a Jobkeeper scheme where you are registered before the end of any relevant Jobkeeper payment fortnight. So what that means is normally to be entitled for Jobkeeper, you've got to be enrolled in the Jobkeeper scheme before the end of the relevant fortnight you want to be paid in arrears for. So if you want to be in the first enrolment fortnight, which is the 30th of March to the 13th of April, you need to be enrolled before that fortnight. Now, there's an exception they're granting in April because they're running behind. You've got to be registered to be able to claim in the 2 fortnights in April. You've got to be registered by the 26th of April rather than by the 12th of April, which is what it would originally have been before the end of the first fortnight. And let me just keep going here, sorry. This is what they said before, where a business wasn't in operation a year earlier or where the turnover is not representative of their normal turnover, the Commissioner is going to be providing alternate tests, which they have not done yet. Identifying who is an eligible employee, which is a crucial part in the process. it's really important that the employer elects to participate in the job, that they include all eligible employees in the scheme, unless the employee advises the employer they do not wish them to claim on their behalf. An eligible employee is one who satisfies all of the following. They're currently employed by the employer, but that also includes those that have been stood down. They are employed by the employer on the 1st of March. They're in full-time or part-time or long-term casual, including long-term casual. You've got to be there for more than 12 months and be employed on a regular and systematic basis. That's really important. They had to be at least 16 on the 1st of March, a resident of Australia for social security purposes, which means an Australian citizen or holding a permanent visa, or a resident for tax purposes. The employee can't have given notice anywhere else. And if they're a long-term employee, they can't be a permanent, if they're a long-term casual, they can't be a permanent employee of any other employer. Now, the ATO have put up a form on their website now, which is the Jobkeeper Employee Nomination Notice, which is where the employer gets all eligible employees to fill in their part and whether they want to be nominated as part of the Jobkeeper program, which is really important before you pay them. And the next important point is you must physically pay them at least $1,500 a fortnight. You could be paying them more than that. In that's the case, you don't need to top them up. But if you're paying them under that, you've got to pay them at least $1,500 gross a fortnight. Now, if an employee is currently, if an employer is, sorry, start again. If you're already receiving more than $1,500 a fortnight, then really all it becomes is a subsidy. If the employee is currently receiving less than $1,500 a fortnight, you're going to have to top them up. And if they've been stood down, they're entitled to the $1,500. Please note, because obviously the ATO are running behind, they're giving everyone until the end of April to catch up payments for the April month. Now, in a perfect world, I'd like you guys to all make it by the second fortnight, which is the 26th of April, because then after the 26th of April, they're going to expect you to keep making it every fortnight after that, minimum $1,500. But they're letting you do catch-up payments this month only, no months at all going forward. But please make sure you do your catch-ups where possible by the 26th, or worst case by the end of April. But you will have to work with your bookkeeper or payroll officer to make sure that when you're doing your catch-up payments that you don't overtax the employees. Now, there's stuff on standing down here in relation to Jobkeeper and the Fair Work Act. They're saying that a stand down direction under Fair Work basically is going to be allowed because of changes to the business, that is less patronage or closure of stores attributable to coronavirus or the government initiatives, which means you basically have to shut your doors. It's still important though that you seek HR advice before you do anything, but it's really important that you document everything you're doing and get it signed by both parties, employer and employee. Now, during the period that they're stood down and maybe receiving the Jobkeeper payment, what's really important, I'm going to draw your attention to this right here, where it says, if they're doing work for you, you effectively cannot reduce your employee's hourly base rate of pay. So what that means is, for each fortnight, you must ensure that your employee either receives the amount of the Jobkeeper payment, which is $1,500, or if a greater amount is payable, the additional amount. So what I mean by that is, if your employee works, gets paid $30 an hour, then over a fortnight, if you divide $1,500 a fortnight into $30 an hour, that means you can't ask them to work more than 50 hours in a fortnight or 25 hours a week. So what that means is, if they do more than 50 hours a fortnight, then you're required to pay them the additional amount on top of the $1,500. You cannot keep it. But if they're only working their 50 hours, then that's fine. The $1,500 is fine, but you've still got to pay them their normal hourly base rate, which is really important. All right, about employment agreements, you've got to make sure that everything's documented, like I said before. Now, I covered this the other day. If you don't have employees, if your business has dropped 30%, in other words, you pass the turnover drop test, and your business is either a sole trader, a partnership, a company, or a trust, you are able, if you are one of the business owners or people who run the business and don't effectively draw a wage, then you're entitled to nominate yourself, one person only though, as a active eligible business participant. Now there's forms to nominate for employees. There's also forms to nominate for these guys. Unfortunately, these eligible business participant forms are not out on the website yet. But importantly, you've still got to meet the 30% drop test, which shouldn't be an issue. You need to have an ABN on or before the 12th of March. You've got to be actively engaged in the operations of the business at the 1st of March, not getting Jobkeeper from anywhere else, not nominated anywhere else, not a permanent employee anywhere else, and at least 16 years of age. So once again, same sort of things. Now, I want to go through some FAQs with you guys because all this stuff's really, really important. So the first question is, do businesses have to meet the decline in turnover test on an ongoing basis? And the answer to that is no. While you must satisfy the decline in turnover test to get Jobkeeper, once it's satisfied, there's no requirement to retest in later fortnights. So the decline in turnover test only needs to be satisfied once. So as a result, if you can demonstrate under self-assessment that you've dropped your 30%, then you will continue to get Jobkeeper even if your turnover subsequently recovers, which is really, really practical. Next. What if a business's turnover has not yet decreased by 30% but is predicted to do so? The Treasury has advised the ATO will be providing guidance about self-assessment in due course. Although, remember, I have already mentioned about at the moment, they'll let you do projected GST for April month versus April last year and projected GST turnover for April to June 20 quarter and compared to April to 20, but you're obviously going to have to be pretty careful in your estimates because there are hefty penalties, but you've got to make sure you put some common sense behind your estimates. So are employers required to continue to pay employees to qualify for Jobkeeper? Absolutely. So that means if you want to get Jobkeeper, you've got to keep paying everyone every fortnight. And as I said, the first fortnight was the 30th of March till the 12th of April. And the next fortnight was the 13th of April to the 26th of April. So what that means is if you want Jobkeeper, you've got to pay first and then get it paid in arrears about a month behind. That's the way the system's been set up. So if an employee has been stood down after the 1st of March, does an employer need to pay them? The answer is yes. This means, as discussed, employers will need to make payments to eligible employees, including employees who have been stood down. This means the employer must pay the stood down employee a minimum of $1,500 a fortnight. This is a really good one. Can employers select which of their eligible employees are covered by Jobkeeper? And the answer is no. It is a one-in, all-in philosophy. So once you decide to participate in Jobkeeper, you must ensure that all of your eligible employees who have signed the nomination form and agree to be nominated participate. You cannot pick and choose who you pay Jobkeeper for. It's a one-in, all-in. So all eligible employees have to be included. So are there Jobkeeper payments assessable income? Yes, it's taxable income to the business. Are employers required to deduct PAYG withholding? Yes. And if you're just paying them $1,500 a fortnight, the tax is $192 a fortnight, assuming they're getting the tax-free threshold and there's no other amounts that affect that. Super guarantee. Are you required to pay super guarantee to extra Jobkeeper payments? The answer is no. So I've covered this in my prior webinars. Basically, if you have to pay top-up amounts on what you normally pay them, there's no super payable on the top-up amount. And here's a table. Here's a nice little table. So subject to super guarantee. If the employee, so if I'm currently earning $3,000, if you're currently paying me right now $3,000 a fortnight, obviously you don't have to pay any additional amounts for Jobkeeper for me. you just get effectively a subsidy of my fortnight, but you got to pay super on my whole wage. But if I'm earning less than $1,500 a fortnight, then my normal wage that I currently earn, you pay super on, and any top up to get you to $1,500, there's no super. And if I've, e.g., been previously stood down and not earning a cent, but you put me back on just to pay JobKeeper, there's no super on that $1,500. Sorry about labour hire. We've already gone through the nomination for participants. The only one other thing I wanted to, because I glossed over it too quickly, the only other thing I really wanted to mention here, where is it? Sorry, just bear with me. So, what it means, as far as I know, about people who have been stood down is if you've stood down your employee after the 1st of March, so they were working for you at the 1st of March, and then you stood them down, if they meet the eligible employee status, which I covered before, which I'll quickly flick up here, this sort of stuff. No, sorry, not that one. Sorry, just bear with me. This. So if they were currently employed at the 1st of March, full-time or part-time or long-term casual, systematic and regular, more than 12 months, 16 years of age, Australian resident, and not a permanent employee elsewhere or not nominated elsewhere, if they pass all those standard criteria for being an eligible employee, our understanding of it is that if they're an eligible employee and if they've been stood down and they pass all the eligible employee tests, then our understanding is you are required to pay them the $1,500. If you nominate for JobKeeper and they accept also nomination for JobKeeper, you are required to pay them the $1,500 per fortnight. You don't have the choice. Like, as I said, moving on here, you can't elect. It's a one and all in philosophy. So basically, once you've enrolled as an employer, once the employee is accepted, every employee who's eligible, who was previously employed as part-time, full-time, casual, more than 12 months, or someone stood down who meets those criteria, same thing, then you are required to pay JobKeeper on all of those people. You can't pick and choose. So guys, that's it in a nutshell. If you've got any further questions, give us a yell. Otherwise, until our next update, take care.